Looking at the Rothmans newsletter this month, the big article on company cars and the various issues there, obviously it's worth noting that you take a fraction, a percentage based on emissions and all that sort of things, times by the list price of the car, between 10 and 35%, I think. Now that in itself is expensive enough, but a lot of people miss out completely the fact that you also have the fuel charge on that to deal with as well.
Yes, if you take a typical director, Giles, they'll have their company car, BMW, whatever it might be, and if they then put their petrol or diesel bills through the company, on top of the car benefit, there is a very significant fuel benefit, which over the years has increased quite dramatically. And nowadays, the calculation will take the relevant percentage, as you say, between 10 and 35. They apply that to the so-called fuel multiplier, which is in excess now of 20,000 a year, and that gives a further taxable benefit. So it might be, depending on the emissions, that the relevant percentage is, say, 27% of the 20-odd thousand. It gives you, let's say, a taxable benefit of £5,500.
So just to check then, so if I've got a car, 27% you've said, which will be based on the emissions of the car, and the car is £50,000 list price of car,
yep,
you're going to have a £13,500 car benefit.
Yep.
You're then going to have potentially another £5,500
if you put all the bills through the company.
If you put the bills through the company, another £5,500 just for the fuel.
Yeah, yeah.
And the reason, probably, if you were a small business, you would do that is to get the corporation tax relief, I guess, on the fuel that you're buying.
And there'll also be a VAT issue, input tax on the fuel cost as well. But here's a key point. What directors should do is a calculation to see whether they could avoid the whole of that fuel element by reimbursing their own company for the cost of the private fuel. And the problem with the fuel benefit is it's all or nothing. So either you don't be subject to the fuel benefit at all because the company doesn't provide you with any petrol or diesel, or if the company does provide you with petrol or diesel, you can reimburse for the whole of the private fuel cost, and if you reimburse for the whole of it, then there's no benefit. So what we need to do is see whether it's worthwhile reimbursing, because let's suppose the tax cost is of the order of a couple of thousand on that fuel benefit of 5,500 that we had as an illustration. How much petrol or diesel can you buy for £2,200, say? Well, you'd work it out by looking at the price of petrol, the MPG of the particular car, and that might then equate to private miles of 150 miles a week, say. And you then say to yourself, well, how much am I using this car on private journeys? And it'll depend on your circumstances.
So there's three main choices, I think. You either decide to just pay the fuel, charge itself, the percentage times by this number, just over £20,000, or you reimburse the private fuel to avoid the benefit, or of course you just pay for your own private petrol for the company car, and then for business miles you would then actually claim an amount from the company in lieu of the petrol charge for those miles.
And the company is then able, if you're using a company car, to reimburse you using what are known as the advisory fuel rates, which range, I think, from 15 pence up to 25 pence a mile, depending on the engine size.
So, an awful lot of maths to do, and something you should speak to your advisors about, I guess.